It's Chris here from Serene Education with the 4 majors analysis update for the 24th of November 2011. Euro against US dollar. We had a beautiful fall yesterday after news coming out that Germany was failed to really get its required rate for its 10-year bonds. They tried to auction some bonds yesterday that pretty much didn't follow through, and it was a dismal display, and yeah, it pretty much stacked up how bad things were, and probably reaffirmed that Germany is also pretty much in the mix in terms of how things are really going in Europe at the moment. But what we've seen clearly after a big move is obviously a pause, and that pause has come over the Asian session. You look at the highs now, looking lower. You can see trend line pretty much in play yesterday, really pushing price lower. The moment it came in contact with it, so a lot of the previous day exhaustion candle after 2 consecutive days or 3 consecutive days of resistance at the 13,500 mark. Same thing happened not too long ago at the 13,885 mark. Resistance here again, support followed by a number of days of resistance, and then the break lower. So now, as things stand, we should be trading lower, and we are going into consolidation range. That's typical. That's bound to happen. But you can see we are going to squeeze now. If you look at the 3 consecutive bounces before, we are seeing a squeeze. We're seeing price trend squeezing into this downside trend as we head towards our all-time low here at 13,1500. Okay, so what could we expect? Well, one of two things. We could see price bouncing higher again, and then reattempting ideally the prior support and resistance levels here at 13,400, and that would take us back up to this trend line support resistance before we see a further extension lower. Or if we can stay at the bottom end over here, then likely we could see a consolidation at the bottom end here at 13,500, and potentially a further breach to the downside. As it stands now, we are consolidative, so look for consolidation intraday for this time frame. If we look at the intraday for Euro against US dollar on a 30-minute chart, you can quite clearly see that we are testing a 61% retracement level, and I've marked that in with a dark line. There we go, 61 points. The 61.8 pullback level, and prices, you can see quite clearly, had a slight pause at this area. Going into this morning session, the Asian session high has been here, and you can see going into European session this morning, we've seen the last 30-minute candle pretty much buffering against that. The one thing to remember is the 2 moving averages are above price. CTC is still, however, red across the board for this pair, and will remain so until ideally we see a break above this area here and consolidate. And then we should be looking at potentially the next level here at 50% at 13,400, which will take us to that breakout area, just short of that breakout area that we saw yesterday. So these are 2 important areas. If you want to, if we definitely see a break above the current price here at 13,3850, then we could expect 13,4300 or ultimately the 13,4550 as our next potential target intraday on the pullback. A failure to find support here, a breakout here, would see price just rolling over, and then we should be looking for trades to the downside, and ultimately way back down here at 13,3200 where we saw that low over yesterday. Sterling against US dollar, let's have a look. Same thing as the euro. Nice indecision candle the previous day, and then we saw the continuation folding out yesterday. As it stands now, we've taken projection points from the top and from the low to the tops here, and you can see that we have a clear resistance level above us between 15,600 and the 15,200 mark. Clear resistance here, the consolidation resistance, and further up there. So we're trading below all of it. And what we could likely see, if you take the break here and the pullback and the continuation, it should give us an idea, a possible area. Yeah, you can see yesterday those 100% of that initial move was just below us here at 15,500. and we saw price failing to reach those targets and bouncing to the upside. So we could see consolidation. If you just look at the overall trend of this, very, very steep. And if it gets to 15,600, potentially if you look at intraday, we could potentially see price pulling back to 15,600, which happened to be price support and resistance on our larger time frame. But as it stands now, you can see that price direction is very, very strong to the downside. Momentum really picking up. We've had a noticeable breach below two very strong resistance levels. There we go. That was very much a support and resistance, a consolidation area here, bandwidth, and we're trading below that. Now we're going to see consolidation and ultimately just a brief pause before we see further extensions lower. Okay, and you can see the 30-minute intraday candle chart for sterling against US dollar. You can see the pullback, noticeable break lower, consolidation, and then move lower to the 61.8. Yesterday 61.8 acted as a support level, so we were looking for 100% extension of this initial move at the top here. It only got as far as 61.8 yesterday, and then we've seen this bounce through the Asian, going into the latter part of the US session, and Asian session has been trading above that 50% area. So the longer it stays above the 50% area, then obviously we could potentially be looking for at least the 38.2, which is around the consolidation bandwidth that we saw yesterday, just after the breakout through the latter part of the morning session, going into US session GMT yesterday at 15,700. If that'll be our next potential target as price is moving higher. CTC is blue, but we have a bit of a little indecision in between that, especially on the CTC bands on either side. So as it stands now, if we can stay above 1554, then ultimately we could push intraday to at least the 1557.50 mark before we see resistance above us, and that being the breakout resistance at that level there at 15,900. It's got to stay below that to see further indication of downside movement. Failure to do that, then obviously we're going to see price reattempting those highs. That's back up to the institution just beyond the breakout. So there are two clear resistance levels above us. Those will have to keep price in check to the downside. As long as it's trading below those two levels here at 1559 or the 1560-200 mark, then we're pretty much still in that downside consolidation. Next up, US dollar Swiss franc. Here again we can see a push high yesterday after we had the two other pairs doing exactly the opposite. And what it's done is we can see that we're reattempting those highs here at 925, just below the 930 mark, which is an ultimate target. If we take the lows here to the highs at 930, you can see, and if I take the high to the current low here, 61.8 is still pretty much well above price. You'll notice that we've had 3 consecutive days of support at one particular area here. Here we go at the 950, just below the 915 mark. Price has pulled back nicely and found support at that area. All importantly, the trend line, upside trend, is in play as we speak, and as long as I mentioned, as price remains on that side, we could see a potential bounce higher. It's this previous high over here, for example, is one we need to break over now. So you can see it's been consolidating in this range. If you take the wicks or the high or the bodies, you'll notice that we are trading in this sideways consolidation range. If we don't see a break higher, then what we can probably potentially be seeing is a change in market sentiment, and we could see price just falling over and reverting to the downside. Price would need to break and close lower than 915 to see price fall lower, and that would take us back to 910 at least. That's the latter of the support and resistance level. That's the major one. If you want to do that, you can see quite clearly is a resistance, noticeable resistance over the past couple of months. So we are trading in this consolidation bandwidth on the upside. CTC is in our favor, and all the moving averages below price. Our target is not too far off, so we've got to be aware of that. And I've noticed that RSI on our small time frames is looking bearish at the moment. This is a 30-minute time frame. You can quite clearly see those 2 points, 91.10, that very strong support and resistance that I've mentioned on the daily, and our high that we saw not just recently at 92.350. So price, you can see quite clearly, has actually failed to materialize going into the latter part of yesterday's trading session. We saw the highs pretty much going into the US session close, and you can see we had the RSI pretty much pointing to the downside, and that's exactly what's happened now. We've seen price failing to get momentum on that, and pretty much coming unstuck and pushing price lower. As it stands now, we are going into the institution moving average, and if we need to see a clear break below that and close lower to see any further extensions to the downside, you can see quite clearly here 91.60. We do have price support and resistance through here, and that's back in line with the institution moving average. So we need to see a bullish close, a bearish close below that to see any further continuation to the downside, or we could see price just consolidating around this area before we see another reattempt to the highs. So as it stands now, we've got 3 genuine points here. That'll be our high to aim for if price gives us another indication of a potential upside move. And if you look at where the trend is trading now, you can see quite clearly that we do have both the upside trend intraday. Swing highs depicts upside movement. You can quite clearly see through the prior, or was it Tuesday, and through Wednesday we saw swinging highs, and now you can see prices really falling back and reattempting that institution moving average, which is currently 100%. We'll take it back to this level. So we should see price consolidating at that area there, 91.60, and seeing a bounce high. If it breaks below the 100%, the strong support and the institution moving average on a 30-minute time frame, then look at least for 91.40 as our next potential target to the downside, and ultimately back down to 9100, which would be the 261, well extended to the downside, bearish. So just keep that in mind. Last but not least, the US dollar Japanese yen. Yesterday we saw total flip, came from 61.8 oversold to the downside, and then we saw a breach yesterday. Price action was trading at the low end of the wick, however still maintaining the high here, and we saw price action really shooting through and closing higher. And news still comes out, and what it's done now is it's taken us above the 61.8, and we've seen a slight pullback on the Asian session. That's typical. You can see the 20% 20 period moving average in play as we speak. It's still trading above both the 50, which is important. Ideally we need to see it trading above 50 at the 77.50 here to confirm that we are still likely to see a bounce higher. You can see yesterday we saw a rally up to that level, but it failed to close. So we want to see at least the 77.50 being breached to give us any ideas that we should be seeing potential bounce higher to at least 7800, which will be the 38.2, back up to 78.50, and then all importantly way up here to the institution moving average at the 79.50, where we saw the intervention candle close. So as it stands now, we are back up above the 61.8, and our next potential target, if price remains bullish, is to hit for 77.50, should be the 59. A break above that will be back up here to the 79.50-ish mark. Sorry, the 77.95 mark. The 30-minute intraday chart, you can see that the 61.8 mark here has been breached, and as long as price can stay above that, then we should see potential bounce higher. And you can see how price has been swinging higher into this setup, bouncing higher, which indicates upside trend. So importantly, swing higher, swing higher, swing higher, and bang, institution moving edge below price, indicating further upside movement. It is testing the moving averages, but more importantly, it's got to stay above the 77.05 to see at least the 77.50 being tackled quite soon. So as it stands now, that'll be our first intraday target as we head to the upside for this pair. If I take the low to the current high that we saw yesterday, and I do a fib projection or retracement, you can quite clearly see the 38.2 is in play as we speak. So we can get above that, then at least it'll give us some clean air to at least a 23.6, which is the 77.30 mark here, before we see it tackle the highs here at 77.50. So budget time, CTC is in our favor on our 30-minute time frame, but let's get a close above 77.50 16, 17 in this case, to see further extensions higher. That's it for now, guys. Hope you have a fantastic trading day. Just please be aware of any news announcements. Please ensure that you follow the rules of the CTC if you are using this particular template. And most importantly, please back it up with sound money management. We are seeing consolidation against the major downside trend today, or upside trend, depending on which pair you're looking at. But just factor that in. We have news out today. Please be aware of it. A lot on sterling this morning. And today is a bank holiday for the US. So don't expect a lot of liquidity, but we've seen it before. When we've not expected or not expected any movement, we have seen some. So just be aware of any news announcements, factor that into your trading, and keep it simple. So have a fantastic one if you're not trading today, and I'll see you first thing tomorrow morning. Till then, trade serenely.